Welcome back, traders, to another weekly outlook. I hope you're doing great and I hope you had a wonderful trading week. Today we're going to take a look at the forex market and the indices and anticipate what we can expect during the next week, and also do a recap on how our analysis played out from the last week. If you want to follow me on my journey of becoming a funded trader, then join my Telegram channel linked in the description below. I update you every few days on how it's going and which trades I take. But now let's get into the weekly outlook. Right now you're looking at the dollar on the weekly chart, and last week we outlined for you that this inversion fair value gap, outlined with this blue line right here, would act as support to propel price higher, and that's exactly what it did. We formed the low of the week right at the weekly fair value gap, the inversion fair value gap. And right now we closed right at another inversion fair value gap, and I think we can use this as support and trade higher. We also reached up into the weekly order block, the mean threshold of this up close candle, which was also outlined last week. A new line on my chart is the weekly premium wick consequent encroachment, outlined right here. We will be targeting this during the next week if we see bullish prices on dollar. But now let's get into the daily chart to define more specific levels. On the daily chart, we also outlined last week that price would trade into this daily order block and also this fair value gap right here, and that's exactly what we did. We consolidated inside this balanced price range right here, which is a reference point for fair value. Then market dropped lower on Thursday and recovered higher from the daily order block on Friday with the NFP news release. We created a swing high, which creates buy side liquidity above the swing high, and we're still targeting the volume imbalance right here, which lines up with the weekly premium wick consequent encroachment. It's just 50% of the wick which we saw on the weekly chart. So we're looking for higher prices on dollar. And because we already traded into a discount array, which is this daily order block and the fair value gap right here, I don't expect a deeper retracement, and that's why I anticipate the low of the week forming on dollar on Monday. And I want to see higher prices targeting this buy side liquidity and maybe also this volume imbalance, but I'm not sure if we can reach this week. So on Euro US dollar, we don't need to go onto the weekly chart because there's nothing really interesting right there. We traded lower from the daily order block. This was not outlined in last week's weekly outlook. We traded lower from there, and I'm still looking for lower prices on EURUSD. As you can see, at the beginning of the week we rallied from the weekly order block and also this bullish discount fair value gap right here, but I still think with Friday's close especially, I think we can see further lower prices on EURUSD. I mean, the bearish order flow wasn't invalidated at any time. We perfectly respected the bearish order block, and that's why I think we can still continue the bearish movement, targeting the daily discount wick consequent encroachment right here. It's just the 50% of this wick right here on this down close candle. Now let's look at the indices, and our analysis right here played out perfectly from last week. We outlined this weekly order block and said that price would retrace back into it and form the low of the week right there, and that's exactly what happened. Market traded into the weekly order block and rallied higher and took out the buy side liquidity pool, which we have been mentioning for about already a few weeks, I think, and we finally reached this target. Next target which remains is of course this bigger buy side liquidity pool. I don't know if we can reach it next week because the economic calendar is pretty quiet this week, but we formed a new week opening gap right here with last week's price action, and I think this is a nice area of support where if price retraces, this is a area of support which I will look for to take potentially new high probability long orders to target this buy side liquidity. But now let's go onto the daily chart. So on the daily chart, last week we mentioned that Monday's price action would form a fair value gap, and then we could trade into it and then trade higher. And that's exactly, as you can see, what we did. Monday's candle formed a fair value gap outlined with this blue box, which was also inside the weekly order block, and see how nicely price respects it and trades higher on Thursday and Friday. Beautiful delivery right here. And what we can expect going to the next week is I outlined for you this daily bullish order block, which consists of these two down close candles right here. And also we have a fair value gap right here. But of course, we can also just form another fair value gap with Monday's price action next week, and then just trade into the fair value gap and trade higher from there without needing to trade back to the daily order block. But if we trade down to the daily order block, I marked out the open, and it lines also up with the new week opening gap high, which we created with Friday's close and Monday's open. Now let's look at the other two indices. On the top, you can see the NASDAQ, and down here we have the Dow as usual. And as you can see, the Dow finally was able to close above the weekly fair value gap. We saw a nice expansion from there. And right now we formed a weekly bullish order block, and I think we can see retracement into this down close candle outlined here with this blue line, and then see another run higher, hopefully above this swing high, targeting the weekly premium wick consequent encroachment, which we're talking about I think for already 2 or 3 weeks since we started the weekly outlooks again. On NASDAQ, we formed a weekly fair value gap right here, outlined with these two blue lines, and I think this is a nice reference point if we retrace lower, that price can use this as support to trade higher, and also finally target this buy-side liquidity pool up here, outlined with the red line. As I just mentioned earlier, we have a pretty quiet economic calendar this week. I think I never seen such a empty economic calendar. On Monday, we could form the low of the week. As already discussed, I would just wait for London session to play out, let the week open, and see what price action tells you, and see if we if your trade idea or if your bias is still valid at Monday's New York session. If yes, then you can take a trade, of course, during the New York session. I, as an indice trader, I will look for a potential trade setup between 10 to 11 a.m. I think this is a mid-probability trading condition because I don't know how the week will open up, if we gap lower or higher, or if price action does something completely out of my scope. That's why I categorized it as mid-probability trading conditions in my trading plan. On Tuesday, we have no news releases coming out. Either we will see a continuation of Monday's move or just a consolidation. Wednesday, pretty the same thing, no news releases. It's very likely, I think, that we will see a consolidation because the following day we have unemployment claims coming out at 8:30 a.m. That's why I think this is also more a low to mid probability trading condition. It's the middle of the week without any news releases, and on the next day we have a high impact news release. That's why I think I will stay out completely out of Tuesday and focus on Monday, Tuesday, Thursday, and maybe Friday. But now let's get to Thursday and Friday. On Thursday we have a high impact news release, which should provide volatility and momentum into the market. For me, on this day, trading will start between 9:50 to 11 a.m. I think this is a mid to high probability trading condition because we have the news. And if Wednesday was a consolidation, then on Thursday, we will hopefully see a expansion phase. Now on Friday, we have no news release. If Thursday we see a large range day, then we will likely see a consolidation on Friday. And if we saw a large range day, on Thursday, I will stay out of the market completely on Friday. If Thursday stays inside a consolidation on the other side, then Friday could provide us with an expansion, and then I will look for a potential setup between 9:50 to 11 a.m. For me, this is again a mid-probability trading condition because I don't know if we see a expansion on Thursday or not with the news releases. That's why I categorized it again as a mid-probability trading condition. I think this wraps up the weekly outlook. I thank you for watching, and again, if you want to follow me on my journey of becoming a funded trader, join my Telegram channel in the description. And then if you like the video, give me a thumbs up, subscribe so you don't miss out on any future video, and I would say we will see us in the next one. Stay safe, trade safe, bye.